What up, everybody? We're going to recap and review a few trades that I took to end the week, along with some trades that we took as a community in my Discord. And we're going to go over a very important lesson, and I'm going to explain how it's relevant and how I used it in the setups that I traded. We're going to go over the technicals behind each chart, along with some market context. So it's going to be a very good video breakdown. Make sure to stick around. And if you want a very good trading resource, I recommend my Instagram. I post daily trading recaps on here, along with very good trading tips and tricks. The link to this will be in the description below. You're definitely missing out if you aren't following it. Now, let's get right into the video. Before we get into the trades that I took, you all have to understand this important concept. So when you're trading, you have to be extremely reactive to what the market's telling you. It's constantly giving you clues throughout the day, and these clues are present because of price, which tells you what's going on, and volume, which tells you the intention between the market participants. That's all you need. These are the two most leading indicators, which are price and volume, and it's going to tell you the cleanest picture and give you the best clues throughout the day. Now, once you get these clues and this information is processed throughout your head, you need to be reactive to it, and you need to react to what's going on. When you see something, do something about it. React, act upon it fast. Now, no one knows what's going to happen next in the market. If everybody knew what was going on next, everybody would be millionaires. So if the market's giving you a green flag, it's telling you, hey, put this trade on, something's going on here, do it. And understand that as long as you protect yourself, you understand your risk, you implement proper risk management and proper trade management, two things are either going to happen. You're going to take a loss on it, but it's going to be protected, or you're going to take a very big win on the trade because the market gave you that clue that you really needed. Now, the market may also give you a red flag, and you have to be reactive to it and understand what's going on. Maybe it's get out of a position, sell when you have profit, whatever the case may be. Now, people, they try to be reactive, but they really can't think. So what I say to this is think, but don't think too much. Sometimes less thinking is more, because if they get this clue or they get this red or green flag, they think about it and they process it. And when this is going on, the market is developing and it might be too late, and they have less time to react because that move already happened, or they didn't sell early enough, or they didn't sell late enough. So it kind of lags their trading because they had this analysis paralysis where they were putting 100 different scenarios in their head. They were processing so much, and they really missed the greatest clue, which was in the present moment at that time. And anything that's not in the present moment is going to skew your risk to reward because it lagged. So don't be this guy. Don't freeze at your monitors. Don't freeze behind the screen. Think to a certain extent. And when something gives you that clue, react and act upon it. To get more context and understand this trade, let's first go over the pre-market plan. I post these every single day. If you want to follow along, check out the chart in the bottom left. However, we were very bearish. This is on the S&P 500. You all know I trade SPY options off of this chart. We were bearish as we were inside a major supply zone at 4197.5. We were making a lower high, and we were rejecting the 4204 supply zone with some very bearish activity overnight. Now, what I was watching for was a potential breakdown to place SPY puts back into the 4182.5 basing period. It was a demand zone that we bounced at yesterday, as you can see from this lower wick over here. If this holds, we're going to bounce back into the trading range. If it doesn't hold, we have a downside scenario. I was going to update everybody throughout the day in the intraday commentary tab. So here is the overnight action. If we were to just look at what it looked like before the market opened, we had some wicks, rejected supply, and this 4197 was a key supply zone that sellers needed to hold, and the 4182 demand zone was a key area that buyers needed to defend if price pulled back. Now, did I know that this setup was going to happen when I came up with that plan in pre-market? No, but my goal as a trader is to interpret what the market's telling me, reacting to the signals, and taking a trade as long as I manage my risk. Now that I had that bearish context and had that bearish sentiment in the market, my goal was to find a valid entry point. So the market did open. The first 10 minutes we did sell off, and you're not going to see this from a chart, or you kind of could see it. However, we sold off. Again, we're bearish. The market started coming up, and this is what I mean about the relationship to price and volume. This is really all you need to make a trading decision, as long as you understand supply and demand, and as long as you understand market context. So the market did move up over here, and if you were watching price develop, I always say that the market's painting its picture. Your goal is to interpret what's on the canvas. The market started moving up, and as soon as we moved up, it was like a seller was sitting there and immediately offered us way lower. It happened fast. You could see it with the large volume. You could see it with the low wick. But if you were watching price develop, think of it like this. I used the analogy in the trade recap I posted yesterday. Think of you walking into a house and you're walking into a bedroom, right? You don't know what's in the bedroom, but you see somebody in there swinging a baseball bat at you. What are you going to do? You're not going to go into the room. You're going to walk out and you're going to run the other way. Same thing that's happening in the market right here. The market started moving up in the single direction. As soon as we got to the 4191 to 93 area, a seller was there swinging a baseball bat, and the market started coming back down. So right then and there, I reacted. I saw that relationship to price and volume, and I played SPY puts. If I pull up Discord here, I posted my entry. I played the SPY 418 puts at 73 cents. These costed me at 941 right here as soon as this got this reaction. Now, if you weren't fast with the market, if you weren't reactive to it, if you got in later, you would have skewed your risk to reward and you would have diminished your risk to reward. So I got short right here. If I mark it with an oval, 418 puts, targeting the 4182 demand zone, my stop loss was above 4192, 93 area where that aggressive seller was. Now, if you were watching the time and sales as well, you would have seen a large orders coming through hitting the ask, and they were completely getting absorbed by those the passive seller sitting there. So now I was in SPY puts. This was a stress-free trade. It worked out right away in my favor, like the best trades do. The market started selling off, and according to plan, it's almost like I came up with the plan after the fact. But this 4182 level acted like a beautiful magnet. As soon as we came in down here, I saw selling or buying pressure come in at 950 right here. I closed out my SPY puts at $1.05. So it was a 9-minute trade, and I made a 43% return on this. Let's just say you trade 100 contracts. It cost you $7,000 only, right? That $7,000 in 9 minutes now will be worth a little over $10,000 in a very quick trade, a $3,000 profit just like that. Now, if you were watching after the fact, other than volume and other than this wick, you're really not going to see the move. That's why it's always important to have, this type of, I hate to say it, this like relationship with price and volume, understanding what's going on between the market, and then we had this beautiful sell-off. Now, you all know me, I don't like switching from short to long or long to short. However, we did bounce off of this demand zone, and this was a valid area to get long. I know some members did take this trade. This was also an area from the day prior. Let's go over here that we bounced at. So it was a very, very important reference area. I mean, we bounced at it on Tuesday. Beautiful bounce, then end of the day bounced at it, gapped up overnight. So very important reference area we bounced at. SPY calls were valid here. We came up, and it was almost like this seller wasn't really here. He was really holding the 4190, 4193 area with value. Yes, we were at VWAP, but there really wasn't an intention to the downside like we saw earlier. Then we started rallying, consolidating for the rest of the afternoon. We did tag the supply zone, and we did eventually sell off. Nice volume at supply. So very clean trade. The whole basis here is just reacting to it, understanding the clue that market just gave me right there, and taking a trade, understanding my risk. If it works like this, beautiful. If it doesn't work, brush it off and focus on the next best setup. Facebook on Thursday, this is a little bit of a think outside the box. It's not a setup I normally do take. However, it presented a pretty good opportunity. We had everybody in the Discord room watching it as well, and it worked out nice as long as my risk was managed properly. So we had supply around 329 or 328.90, I think. And we also had resistance around 329.12. So I just made it into one key area. They're both different concepts, but they were confluent with each other. We rejected on it Tuesday. Wednesday, we sold off from it. So very key and important reference area, especially if the only other reference area was all-time highs around 331. Third time is the charm. Today we were watching this. I liked how the market opened up and made a high around 329, sold off, and then we started moving back up while the NASDAQ was bouncing off a demand and rallying up as well. Now, this is my favorite scalping strategy that I go over with Trade members, but all I really needed to see now that the setup was there was volume to tell me buyers were there. If price is going to continue to move up, you want to see increasing volume as we do move up. And whether you look at the time and sales for this, whether you look at the volume histogram, whether you look at the candle develop and see thick, green candles to the upside, to each is their own. But I personally was watching just to see price move up pretty fast. And as soon as I saw volume come in on this, I took the break above 329. I played the 330 calls at $1.55. Now, at this point, my target was supply. However, this is not a setup I'm too comfortable with. My stop was below here at 328.50. So I was really risking only $1.50. But like I said, my scalps either A, work out right away, and if they don't work out right away, I know to get out. And because I really deviated away from my edge and how I prefer to trade and what I know makes me money, I wanted to take profits very, very fast. So as soon as I saw volume come in, as soon as I saw us break above 329, prints coming through on the time and sales, the tape was very fast. That could also be another good indication. Started moving up. And now at this point, I just want to see consistent green candles. And the first sign of weakness, the first sign of price stalling out, trading sideways, I exited my full position at $1.40. It was a little over a 70% return. Not the best execution on my end because we did continue to rip past all-time highs. However, I'm not going to complain about this. I did something a little different compared to how I know it works out the best. It made me money, but it's not something I'm uncomfortable with. So I will always take profits fast. But the key to this was I had my order ready. I had the plan set out, my stop loss, my entry. Now at this point, before I entered, was just waiting for the market and waiting for volume to tell me, do it. Now, you all know I'm not a trader that's really concerned with profit and loss, but I want to show you what happens when you follow your process. The money is going to be guaranteed to come. Now, here's some profits from members on Friday. You follow your plan, you follow your edge, you will make money in the long run. The profits and the money are simply byproducts to trading well. If you react to what the market's telling you, you manage your risk, you're going to be able to take very good trading setups pretty much near the start of any big move. On Wednesday, we also have Tesla. This was a very clean setup as buyers were defending the 602, the 694 demand zone the day prior. We had a very clean downtrend line, as you can see from this blue line on the chart. And we wanted to see a valid reversal as long as the 594 to 602 demand zone can hold and 618 supply could trade if we move out of this zone. So Tesla opened up and the first 45 minutes of the market open, call it the first 45 minutes. We are very choppy and this is very illiquid action. And in my opinion, you should not be trading when the market is so balanced and so choppy. We did bounce off of demand, so you have to understand that context. We do have buyers defending it. Now we just need price and volume to confirm it. So as soon as we came above this downtrend line, the blue longer time frame one, and as soon as we came above the lower low and lower high downtrend line, just like this, look what happens to volume as we start moving up. Thick green candles to the upside, very strong buying pressure comes in, and we continuously make higher highs, continuously make higher lows, right into the supply zone for a beautiful area, to take profit. And on Friday, the S&P 500, the day prior was very balanced, overnight was very balanced, and today was the last day going into the holiday weekend. So we were just being cautious. We did have a double top. We did reject supply. So we were bearish below it, watching for puts. We also had the downside 4203 and a quarter demand and 4198 demand if the market wants to test lower prices. So we did open up. Let me make this bigger. We did open up. We were rejecting VWAP. We were bearish after the double top. Sold off. Nothing really to it. The volume was very low today. As you can see, we had a 1 million lots traded compared to a daily average of 1.5 million. And that daily average is very low considering the current market conditions that we have been seeing. But Nvidia was another setup that we pretty much, a lot of people nailed in the Discord today. We had momentum, we had volume. My favorite scalping strategy came back again, and we rode this all the way up. The market just started continuously building momentum as it was trading higher. And when you see something like this, there's no reason to short the market. Instead, you should be looking for dips back into demand or pullbacks into an area of either consolidation or where there was a previous buyer in the market to look to take long. But nice all-day runner on this. No reason to fight the trend. If you learned something from this video, please just give it a thumbs up. I'd appreciate it. Also, follow me on Instagram. And if you really want to learn more, I offer a very in-depth and educational course. Click the links in the description. But besides that, I'm going to end it. Peace out.